presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Wow, what a day today. We are potentially going to be joined by Basil Chapman. He's vacationing in the land down under, but we're going to see if we can get that connection going. And of course, we're going to have Tim Ord on today. Man, a lot of stuff going on. I kind of had to hedge a little bit today, and some of my stuff, which did stop bleeding a little bit, which was nice. Something that I think might be worth discussing that I did is I ended up taking profit in SMCI. Okay, so the whole idea is that they're supposed to report today. I got, luckily for a profit of 169%, just on those calls. We had 37 strikes. I sold, I don't know, like at 49 or something like that. It has been kind of volatile throughout the last bit of the day here. I did actually end up keeping my puts, which is a 36 strike price. That actually has been doing kind of well today, too, although you're getting some movement to the upside. But it's very volatile in between that $46 and $47 area. Okay, so what made me change, kind of my opinion? There might still be the event that they do publish. I think that the convertibles was a little bit spooky, right? I think there might be some revisions in the 10K if they do file. The fact that they have not provided any kind of visibility on this filing beyond that 8K they had, I believe it was February 11th, kind of irks me a little bit, and I don't want to play that game with these guys. They still have the ability, right, to not publish today, and they can get delisted, and then they can appeal that in March 25th. They would, long story short, it just got to a point where I wasn't very happy, kind of with the management of the company. I would have, I'm in this kind of position where if, let's say that we all had a company together and we didn't report earnings for, multiple quarters and missed a 10K on top of that. And we say, hey, don't worry, we're pretty confident we're gonna be able to publish. And then we say nothing to you after that, right? And all of our social media is still posting all the time, right? Oh, look how great we are. You clear big convertibles, right? That actually, do have a, basically like they have a put option in them, right? Which is kind of insane. If things in the business materially change, read that as they get delisted. Nice bump up right now. That's some decent volume to the upside at 47.28. This is what I'll say, right? If they publish tomorrow, okay, that's fine. I mean, the puts, the premium that I'm paying for the puts, not a big deal. That gets absorbed by my gains that I had on the calls. If they publish tonight and things are good, this stock has a lot to rally still, right? And so, you can still get kind of exposure that way. That's one way to look at it. But I'm getting somewhat hesitant of buying any of these current dips right now. Really what we're all waiting on is NVIDIA. If NVIDIA has good forward guidance, we're going to be good to go. If for whatever reason they could even be growing, but it's not as good as people are anticipating, this will correct even further. A lot of what's going on right now, and I'm not really sure what the catalyst was. The only thing I can kind of think of was that TD Cowen paper saying that, Microsoft was canceling data center build-outs. And if you read that paper, first things first, what you would really pull away from it is it kind of seems like that would be business specific, right? Microsoft has been one of the, I think, the largest purchaser of basically compute, right, of megawatts over the past few years, and that's to build out Azure, right? Also, these data centers are a little bit different, right? What you use to run AI is not the same as Azure, and so on, or trad cloud, I should say. So that in and of itself doesn't, give me any fear. Additionally, we don't know what it is, so I think a lot of that was speculation. What I would also say is they just reported CapEx, right? And I don't think that they would pivot that quickly on CapEx. Like, I know we said this much for capital expenditure in data centers, but actually we're wrong. We figured out that the market is way too saturated with compute, so we're going to reduce that. I think, I mean, that wasn't going to happen, and that is not what happened. And thank God you had the CEO come out and say, no, we're still doing this. And again, still, I would argue it, even without that knowledge, it was clearly a business-specific risk if you knew anything about it. I don't know if that was the catalyst. You never really know. One of the things that I can say, and you're looking at things like Tesla, we were short this thing, 280 for May. What was the logic behind that? That things have gotten materially worse in the economy, materially worse in this business. You have this massive run-up from Donald Trump winning, not necessary, and there is nothing to sustain that, right? And so what I would say is a lot of the equities that benefited from that Trump run-up, look and see what's going on for them. One, economy is getting tougher. Okay, I'm concerned we might get to a level of stagflation at some certain capacity, at least for a vast swath of the population. I think that you already have certain portions of the population that are in recession, or at least feel like they're in a recession right now. Of course, you have the top earners spending money so they can keep spending forever, and we went through that a few years ago, and things resolved. But I think at least for some of these equities that moved up rapidly after Trump's win, look and see how they did over the last quarter. And if they didn't do well, these things are going back to pre-Trump levels. Okay, I mean, I could see this easily hitting this gap up from earnings, right, around 250. And that's really what needed to happen. These kind of equities need to reprice themselves, right, get back to some decent move that you had last time you had good earnings, and you need to work from there. Okay, that's kind of what I'm looking at with that. And so, regardless, I think Tesla's. I'm in TSLZ as well, so that's some nice movement to the downside. And I just needed that because I was getting eroded, mainly in Nebius and TSSI. To give you some visual and what I'm doing on TSSI, okay, so this is pretty gnarly, right, to the downside. Again, this is data center type deal. They also have very tight margins. They also had a high PE. The question is going to be, especially for things like Kava, that are reporting today, this is food. Is this market going to accept these super high PEs? Earnings expect to 3 times there. You just divide that out, it's still pretty high PE for a food company. $11.4 billion. These are just things you got to kind of ask yourself when you're starting to tighten the belt a little bit in the country. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Still working on getting Basil Chapman on. That is okay. What am I doing with TSSI? So, I'm pretty down on this. What can you say? Or darn, excuse me. You're off 12.6% today. I have basically operating right now kind of a straddle, right? I think my cost basis for this is about I think $13.50 or something around there, $14. I have a straddle going on right now. This is not really the best way to do this, but this is kind of what I'm thinking. I have it for, I believe these are like March, because that's the only term they had. March something options, March 21st, that's 24 days. So I have them at 10 and then calls at 10 as well, right? So I bought those kind of in the money. My idea with this is, let's say NVIDIA reports, better than anticipated. And listen, there is some demand for NVIDIA. These CapEx is staying the same for all these major hyperscalers. Nobody is reeling back CapEx. That's something important for everyone to keep in mind. Nobody is reeling that back. These are increased capital expenditures to get AI to function properly, whether it's data centers, GPUs, specialized chips, all those kind of things. That has not changed materially, no matter what that analyst at TD Cowen says, right? It was just, I don't even think he really had a conclusion. I think everyone's kind of made their own kind of assumptions based on that. So that's unfortunate. But this is the way I'm looking at it. If NVIDIA posts poor earnings, this will crater. Tech, data centers, all that stuff's going to crater, okay? So I still profit on a put like that. And then let's say it's not the case. Like, hey, you know what? No, everything's great. These data centers are going to be massive. This will come back up as well. Okay, so I'm trying to capture, the movement on each side there. And really, in reality, with TSSI, I like it. This has been kind of haunting around my portfolio a little bit. And I do believe margins will improve. I think the P is very high, and that's what we were kind of saying when we spoke about it the first time. It's like, listen, it's kind of risky, but they're ingrained with Dell. Dell is the choice pick for these data center build-outs. Okay, TSSI gets a nice cut of that as well. I'd like to see margins get better on TSSI, but what I will probably think, because this kind of freaked me just a little bit, is I kind of want to rotate out of these sectors. I'm looking, listen, I still like Ryan Mittal. I like Baba. I like BYD. I think Europe is an interesting choice right now. Coca-Cola, I think is great. They have a new line coming out, which is fantastic. These are kind of the things I'm looking at with all of this, I even if this tech sector kind of comes back, I think this kind of freaked me out a little bit. I think that the valuations for a lot of things are still high. Of course, your hyperscalers don't have insane PEs or anything like that. And everything that did is going to come back to reality. And let's look at Palantir, right? You're off 3.72%, still trading at a 459 PE. You know, that whole meme that they needed to be, we were talking about this in the past, like maybe a few weeks ago. And then I was talking with Tommy earlier today, and he echoed the same thing. You know, I think he must have seen the same stuff where it's like, this needs to be $1 trillion stock. No, it doesn't. It absolutely doesn't need to be $1 trillion stock. I think on its revenue, its quarterly that are reported, cash generator is only like 40% of revenue. That's from operations. That's not good, right? And it doesn't mean the company's bad, and it doesn't mean that the company's going to collapse or anything like that. But it also doesn't mean that this should be a 460 PE. You know. So, and I listen. I will be the first to tell you, and you guys know this. I'm comfortable with high PE stocks. I really am. When you have nice high growth environments, you know, cost of capital is low. There's still a bunch of, you know, capital that exists, right? You still have a lot of capital expenditure occurring. This is really good stuff. There's new novel technology. You're going to lose if you are afraid of higher PEs, right? But when you start getting fear of illiquidity, you know, tariffs, all this kind of stuff, war, these things don't go very well. And I think you kind of come back a little bit to earth on this. And this is what's going to happen with these very high PE stocks. I think you're just going to get a repricing, you know, really back to pre-Trump levels, right? I mean, this thing's about to close its gap, and I don't see why it wouldn't continue to go down. Again, what is the value here? Yeah. Anyways, that's kind of what I'm looking at right now. I'm going to check and see if we have Basil on the line. If not, we can bring him back on sometime here soon. All right, looks like we don't have Basil. That is okay. We're going to wrap up here with something else. I'm looking at my calls right now, or my puts on SMCI. How about that? At some point, maybe I'll show you guys. This is like, it's kind of nuts, honestly. But yeah, let's talk about it. I mean, really, I like the Chinese stocks. I like Europe stocks right now. I think Coca-Cola is great. I think Amazon's kind of interesting. Coca-Cola is coming out with a new line with a prebiotic drink. If you guys are familiar with like Poppy or, I forget the other one. But this is a new big craze, and kind of young people are health conscious, or like consuming things that they believe makes them look health conscious, and that's definitely one of them. So it's nice to see them kind of expanding out and trying to capture that market. You know, if you get people say, I don't really drink soda, it's not good for you, you know, you have aspartame, etc. It's like, well, I've seen these exact people drinking poppies, which are like monk fruit or stevia flavored, and they have the prebiotics. Again, I'm not sure how well those actually work, but the consumers like it quite a bit, which I think is important to look at. Let's see what else we have going on right now. It's a bunch of stuff I wanted to talk about with Microsoft, but I think I kind of blew through it. You know, I think what's kind of interesting is you have Feds looking at, you know, particular rate cuts in June because of consumer confidence coming down, which I thought was kind of interesting. It also seems like consumer confidence, you know, and I talk about this because I see people like, you know, comment about it or make videos on it. And, you know, I mean, that's just as good as some kind of, you know, poll. But the consumer confidence seems a little bit divided based on political position, which I wonder how that kind of works out for people. You know, I don't know if a lot of the sell-off also has to do with that, but you did have the Fed, they say they've seen resuming rate cuts in June as consumer confidence takes a dive, which is kind of interesting. There's from Reuters that say the Federal Reserve is likely to resume cutting interest rates in June and could reduce short-term borrowing costs again in September. The traders are betting that on Tuesday. Consumer confidence deteriorated at the sharpest pace in 3.5 years in February. Just general anxiety over Donald Trump's policies. I think that's warranted, honestly. I guess what that big sell-off was on Friday is said, hey, listen, the tariffs are back on, which I don't know if this is the way to do it. And hey, listen, maybe I'm entirely wrong, and you know, next year is going to be the best thing America's ever seen, but I just don't, maybe I don't see it yet. I'm not entirely sure. But this market really tends to be kind of at his whim and what he says, which I think is tough. Let's look at HIMSS right now. I have to think about this a little bit more and kind of do some maths or really like spreadsheet stuff, but for him, does this sell-off maybe make sense? Okay, you had, I think, semaglutide or GLP-1 drugs accounted for $225 million in revenue. Okay, I'm not sure we know what the margin is on that yet, but the growth was pretty substantial. That was a substantial part of revenue growth. They're going to lose that in the next 60 to 90 days, at least semaglutide, okay? They still have liraglutide. They can still float this peptide business. Again, I think this is it's like, hey, we're at a 91 PE, even though we're in healthcare, and I think there's a big demand for that. But it's going to be, how much, what can they price these things at? And will people continue to buy in tighter economic times? If you stay right there, we'll be right back. Tim more.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Is this right? Perfect. SPY trading off about 0.29% at 595.43. Get the composite off about 1.01% at 92. You got Dow Jones Industrial up about 0.52% at 43,687. With those Russell futures up about 0.07% at 2,185. We are joined right now, as it is it's a Tuesday. Oh, man. Oh, you hate to hear that, right? As we are joined on Tuesday and Thursday by Tim Ord of the Ord Oracle. We love having Tim on. Man, it has been such a wild market, so these are the times where we get to have him 2 times a week that are just really valuable. If you want to check out more about Tim Ord, you can go to ord-oracle.com. You can access his newsletter there and get his book. Additionally, you can contact him. I also want to say that, of course, you can go to our YouTube channel, Tiger Financial News Network, and you can see all of our past interviews. Really recommend checking those out. If you decide to do so, please consider liking the video. Please consider subscribing. It helps us out immensely. You can also go to TFNN.com, check out the Services tab, Secret Science of Market Tops, and the 6 secret ratios every trader should know. As I've been saying, conditions have not improved. I still believe the Secret Science of Market Tops is probably one of the best ones to get right now. Tim Ord, how are you doing?
Good. There's a lot of stuff going on right now.
Yes.
This is start with chart 1.
Totally.
I changed my format a little bit here. It's probably a lot easier to see what may be going on. But we displayed this chart last week, and I think last week, Thursday, probably Tuesday too. But this kind of looks at the bigger picture. The market can go down when this indicator gets below 0.7 or gets 0.75 or below, but it warns you that approaching bottom is forming. For some reason, in basically 2022, that bear market, it didn't matter, but all the other times it did. So whatever happened in 2022, why this indicator didn't work, don't know. And so you have to call that an anomaly, I guess, but all the other times it did. But yeah, what it is the 3-week average of the Association of Individual Investors Bull-Bear Ratio. Anything below 0.75, we're at 0.68 right now, is usually you're going into some sort of a low.
Okay.
So we had that last Thursday, kind of a similar reading. I don't remember exactly what it was, but we're in that vicinity where most of the decline, I'll put it that way, is done. So that's kind of a bigger picture. We're going to start going to a smaller picture.
Okay.
All right. Well, actually, this is a bigger picture too. This is the bottom window is a 100-day trend going back to 2010, and the top window is NYSE. And normally when this indicator gets down around 1, we're at 1 right now. We've been around 1 since basically January or so, late December, early January. And the market actually really hasn't moved much since December, kind of going sideways here. And I think probably what's going to happen the rest of this year, it'll probably go up a little bit, but we're not going to have a year that's going to be plus 20.
Yeah.
And we'll be lucky to make plus 10. And I'm kind of thinking between 5 and 10% probably this year. But I marked the times in red lines going back to 2010. Or actually, there's 2 blue lines in there too. But the red lines are times when this indicator reached 1.00 or lower. And a lot of times they were marked highs. And I got 2 blue lines there that the ratio or the 100-day trend did get below 1, and the market still went up. But I don't think that's going to happen this time around. In other words, 75% of the time when this gets below 1, the market is at a minimum a sideways move, if not a short-term top or not an intermediate-term top.
Okay.
So I'm thinking at best we'll do sideways, at worst we'll do decline, but I don't think decline's really in the cards. This is kind of the reason why. The next window is the Zwag breast thrust indicator, and we had a brag thrust indicator trigger back in December 1st of January, and the bottom window is the WAG breast thrust indicator, and it's advancing issues over total issues, and you take a 10-day average of that. When you get below 0.4, it initiates the indicator, and it has to go from 0.4 or lower to 0.6 or higher within 10 days. The last signal came again back in early January. It went from 0.41 to 0.61 in 6 days. Okay. So a lot of times when that wag breast thrust indicator gets triggered, the time when it got triggered, that's usually about the low it can be. So we're approaching that low right now. So that's the worst case scenario. I think you're going to, which is about 5,800 on the SPX. And this time around, I don't think we'll quite get there. But in the past, when this wag breast thrust indicator did trigger the low of that, when it did get triggered, the low of that range was a previous bottom. And if you look at 2022, you had 3 of those wag breast thrust indicators, and pretty much that was picking out the lows, especially if you got 3 in a row or 3 over a year's period. That was just a base building period for the big rally we had since the 2022 low. Sure. So now we're up against an area that we may have some difficulties here, but I don't see a top of any consequence. So I think you may test that 5,800, find support, rally up, rally kind of fails, comes back down. So not a big issue. So let's get down into the nitty gritty here. This indicator works pretty well. It's actually triggering it right now. It's a 10-day average. It's the middle window is the SPX tilt ratio. The bottom window is the SPX. The top window is the RSI for the SPX tilt ratio. And when the ratio gets down, or the RSI gets down around 30, you're looking at a low. When it gets up around 70, you're looking at a high. The blue lines point out the highs, previous highs in the past, if you can see it down here on the bottom. Yep. And pretty well. And I was looking for that high, the RSI, to get up around 70 on this last high, and it never did. So now, I did this earlier today. It's still around this range right now, but the RSI is 28. It only needs to get below is 30. So we're hitting the mark right now. Can the market move low a little bit more? Maybe, but not a whole lot. So we're pretty much starting to develop a low here. Yep, here.
Tim, I so hope so. Tim, please stay right there. Folks, we'll be right back after the break with Tim Orr.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. It is a Tuesday, so I am joined by Tim Ord of the Ord Oracle. Again, I strongly recommend checking out his website. That is going to be ord-oracle.com. You can check out his book and newsletter there. Tim, before we went to the break, we were looking at the SPX TLT ratio. You're seeing a potential bottoming pattern here.
Right. Yep. It's starting to bottom. It could be a day off, but pretty much it nails the bottom. If you look at the last two times, August, September, you know, when something goes too fast, so it's the ratio, it's the SPX tilt ratio. So if one side goes too fast against the other, the RSI rises or falls. And that's what's happening right now. So this is kind of so I have several different indicators. Try to pick out the highs and lows, and sometimes they don't all line up together, but sometimes they do, and this is probably one of those times. So anyhow, you got to be bullish in here. You know, this is going to be today, or actually it could be tomorrow or Thursday, don't know. But it depends what happens on this next. This is kind of now we're getting into the nitty gritty of what's going on. This chart's pretty messy, but anyhow, this blue area I have here is times when the trend is near 1.2 and higher. If you go into that area again, normally the trend will go up because this is support area. Wherever the trend gets above 1.2, your market's going into support. And I said yesterday in my report, I said this February 3rd low probably going to be touched.
Yes.
And if you look today, we touched that low. Now it has to touch that low on a 10% lighter volume. If we don't, we're going to go back down and test this low again today. So that's one thing. Will we do it? Well, volume kind of comes. This is SPY, and the volume keeps updating till a quarter after. So we actually may hit that volume, which was, I think, 66 million shares on February 3rd, which is this day right here. And we may hit it. If we do, we come back down to it. But either way, we're still making a low. This will probably be a test of that low. I've also, if you notice, I got circles in red on this chart. And actually, we got one. Let me just circle it here. Where's my dot at? Okay, there it is. But anyhow, I'm circling this red here.
I see,
yeah.
Perfect.
It's maps, Yeah, I'm not an artist. But anyhow, what I'm circling there is the times when this market reaches, trades below the upper or lower Bollinger Band.
Yes.
If you notice, when you do that, market usually backs off. The normal range of the Bollinger Band is the 20-day average. If you get too far away from it, which is basically the upper Bollinger Band or lower Bollinger Band, you'll at least come back down to the middle Bollinger Band. So this is another area of support. We're also, again, testing the February 3rd low. Volume has to be 10% lighter than 660 million, so it has to come in around 60 million or less for that to happen. And I don't have the trend in here, but the trend right now, as we're talking, is 1.88. So we do have panic, and the panic did come in.
Yes.
Let me get back to the arrow here. Yeah, okay, here's there. So anyhow, we got the lower Bollinger Band here, just like previous times you hit below it. The RSI, or the trend, is supposed to get in 1.2 or higher. We're doing it 1.88. Right. So we're in the area of support right now. So we got several different indicators. You got the SPX tilt ratio RSI hitting it. Mm-hmm. You got panic in the trend right now. It has to go on the close. It can't be intraday. So sometimes the trend gets high all day, then right on the close it goes neutral. And that could happen today. So this is kind of a call on the close if this will be a bottom today or not. But even if you jump the gun a little bit, probably the worst case scenario is the test of today's low. I thought at some point we may fill the gap, and I thought, get down to 582, and that still may happen, but not this go around. I think we're going to touch that gap, which we're doing right now, and try to rally up and try to take out the previous highs. Sure. And if that doesn't happen, then we may come back down and fill the gap. So this is a bunch of gobbledygook since December. If you look over here in December, we really hadn't gone anywhere. The market went up, we came back down. So this is pretty choppy. So you get you have to watch a lot of different type indicators to pick out the chop. But yes. Right now, if we close right now with the volume where it is and the trend where it is, I'd be long the market.
Okay.
But we're not close.
Right.
So a lot can happen in the next 15, 20 minutes.
It definitely can.
But anyhow, it looks pretty good. That's I'm kind of bullish here, and these are the reasons why. So we got a little bit of time to go over the gold market real quick.
Yes.
All right. This is keep showing this chart. You got to remember the monthly charts rule the daily charts rule the weekly charts, and all the way down. So long as the monthly charts remain on a bicycle, which it is, the bottom window is the monthly GDX up-down volume. Next window higher is GDX advanced decline cumulative. As long as those two indicators stay above the mid-Bollinger Band, which they are right now, the uptrend's intact. So it's bullish. This is what's going on a short-term basis here. This is what I thought we'd go into consolidation. We talked about last week, I think, and we're probably heading, GDX is heading for some sort of a pullback here. The reason why this window here is an inflation-deflation ratio, and when the RSI gets up around 70, which it did last week, normally there's a pullback in the market, and that's exactly what happened. But I don't think anything real serious to the downside is indicated. I think normally you go back to the previous highs, and on GDX, previous highs around 39. Mm-hmm. On the XAU is, 55 area, 155 area, somewhere in there. We're pretty close to that. So I think, probably going to find support near this level. So what happens from there? Up. Actually, this is a bottom indicator, which is a 50-day average of the up-down volume advanced decline indicators for GDX. And once you hit below minus 20, the minimum rally goes to minus 10 at a minimum.
I see.
We're at plus 1.61 right now. So we got further to go. Now, this is a slow-moving indicator. It doesn't try to pick out all the wiggles in the market. It just stays, this uptrend back in early 2024, the market rallied up. It kind of chopped all the way up to that, 43 area. Well, this indicator stayed bullish. It didn't try to pick out all those back and forths. So that's what kind of this indicator is, kind of smooths out the uptrend. Even though you get some chop in it, as long as it stays above zero, the uptrend's intact. And that's probably what's going to happen here. Even though I think we may back and fill here a little bit longer, this indicator, which is the up-down volume, will stay bullish. So I think it'll stay bullish all the way into July. So what that says is the market is going through rotations. Stock, we're rallying or starting to fail, and the ones that have failed are starting to rally again.
Fantastic. And I will say, too, I'm starting to see a major sentiment shift in favor of gold miners, actually, which is pretty fascinating. Tim, thank you so much for joining me. We'll see you Thursday.
All right. Talk to you then. Thanks a lot.
Take care, Tim. Folks, stay right there. We'll be right back for a short segment right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. I was just joined by Tim Ord. Make sure you check out that segment we had together. That's going to be on YouTube, Tiger Financial News Network. Please consider liking and subscribing. We've got about 2 minutes. SMCI dumping right now. I'm halfway like, should I just sell these puts? I mean, I don't know, man. This is such a risky one, right? I mean, it's so risky. You know, part of me thinks this is like a weird little retail trap right now. I mean, this is big movement to the downside on some substantial volume today. You have the SPY coming off even more, off about 0.59%, 0.6%. The Russell is faring a bit better. Composite getting hit. Of course, your tech is really getting slaughtered today, which is what's going on here. Okay, you're catching a major bid back up to the upside here with SMCI. Oh man, I kind of just want to like look at this thing and see, I mean, do I think they report? If they don't report, they're going to get sued, is really what this is, right? Now, here's what happens. They could report and everything's fine, but there's so many shorts out there that they could just pile this thing to the downside, you know? That would be my biggest fear with calls, is the sell-off still occurs. You see what I mean? And then when that sell-off, recovers, then you're good to go. You go back to the upside right now, but man, what is some movement in stocks? Of course, I would never recommend sitting here and trying to stare at ticks on charts, but I think this is just so interesting. You know, here's what I'll say. I think tomorrow I really want to stream live NVIDIA. If that sounds interesting to you, let me know. I'm definitely probably going to do that in the den. I'll try to get YouTube set up, but I would have to use OBS. Long story short, I really want to do that in the den. If this is interesting, I'll try to hop on Discord. Maybe we can look through some stuff. I'll share my charts, have my mic in, all that kind of stuff. Folks, thank you so much for joining me today. Man, I'm really hoping that Tim Ward's charts play off and that this is at least a local bottom. We're gonna have a nice green day today. Tomorrow, at least. Thanks so much, folks. See you tomorrow morning, 9 a.m.